Traumatized by that story you just
I know,
told.
isn't that interesting, though? You know, this is why we're in the equity market. You always get something really good.
It's true,
when you look at the movers.
Really idiosyncratic movers today. Well, we're just beginning earnings season in the rest of the world. We might be coming fairly towards the end of it here in the United States, and that's why I chose to have a look at this chart today, because it's really fascinating to see the PE spread between the US and the rest of the world is still incredibly wide. And this is something that Gina has been writing about for Bloomberg Intelligence as well. Valuations for large cap US equities trading above their 25-year average, even after last year's reset. We're going to have to talk a little bit more about this later on, Gina, but for the moment, suffice it to look at this particular chart and see the difference between US and the rest of the world when it comes to valuations.
That's a great chart. You know what, and Vonnie, I wonder if Jim Bullard was looking at that, because he's, of course, the president of the Federal Reserve Bank of St. Louis. And what's interesting is he talked about the US economy proving more resilient than expected. He talked about and repeated his calls for the Fed to continue to raise rates. And maybe that's why the US has certainly got a higher valuation at this point. He did speak on CNBC earlier today. He also spoke about recession and market expectations. Check it out.
I think that markets have overpriced a recession in the second half of 2022 and overpriced a recession in the first half of 2023. Maybe they're overpricing the chances of recession in the second half 2023.
All right, of course, that's Jim Bullard, the president of the St. Louis Fed on CNBC. But this is important, right? What the market thinks about recession expectations. And he is thinking, Maddie, that the markets have overpriced it, at least for the second half of this year.
Yeah, well, when we got these minutes, my first thing was to keyword search recession. It's mentioned 4 times. It does seem like some members are pricing in a little bit more of a potential impact of a recession, Vonnie. But that was 3 weeks ago, so who knows where we stand today on that.
Well, you know what date it is today, Maddie? It's 2/22, and I hear that on these days there's typically a birthday. I don't know, do we know anyone's having a birthday today?
It's Maddie's
Vonnie.
birthday, everybody.
Carol, Gina, let's all wish Maddie Mills a very happy birthday.
And she hurt her finger.
Guys.
She hurt her finger, so she needs a lot of love right now.
I'm entering the end of my 20s with a broken finger and a beautiful cast of
You
co-anchors.
only need one
guys.
finger to press go on the Bloomberg, so you're good.
Well said, Vonnie. Well said. Thank you.
All right, guys, that's a wrap. Our cross-platform coverage. We'll come back in less than an hour's time, talk a little bit about the market close, some earnings, including NVIDIA after that closing bell, but we'll be back on radio and TV, on Bloomberg Originals, and, of course, on YouTube, Beyond the Bell at 4 p.m. Wall Street time.
Wait till that deal around. Don't you let that deal go down. Wait till that deal around.
All right, everybody, Microsoft, in a big way, is on our radar as well. Actually, Maddie, you brought it up at our planning call yesterday. I mean, they're fighting to save their $69 billion embattled deal to buy Activision Blizzard. There's a bunch of regulatory hurdles here and abroad. You've got the company making it clear that the deal must include Activision's Call of Duty. I mean, oh yeah, that's a big deal.
Right? I mean, of course they want it to include Call of Duty.
Exactly. And then, of course, we've been talking so much about the Bing chatbot. So much going on. We knew we needed to do a Microsoft roundup. So let's bring in Bloomberg Intelligence Senior Software and IT Services Analyst Anurag Rana, joining us via Zoom in New Jersey. Anurag, good to have you here with us. Let's start with the defense Microsoft is doing for this deal to buy Activision Blizzard. How important is it that Microsoft gets it done?
Yeah, so from their Xbox franchise, of the gaming franchise, it is a big deal, frankly, but I don't really see them breaking the company apart in order to get this done. They have made it very clear this is the way they want it. They have made concessions to other platforms in terms of, the access to these games. I don't think they're going to probably bend any more than what they have already done at this point.
I just wonder, why this is only coming up now. It feels like they've gotten pretty far down the road for this antitrust issue to finally start bubbling up. Can you explain that to me?
I think my gut feeling is the regulators are not so keen on getting any large company by any other large company at this point, or even smaller company. So I think they're just trying to find excuse to, block them. But, and I think this is really what's happening at this point. You're absolutely right. They should have come in the day they, filed made the announcement. It should have been around that time. From Microsoft's point of view, I think they have done whatever they could. Now we'll see what they do in terms of quotes, but from, giving concessions, I don't see anything else happening at this point.
But Anurag, how important is it to the Microsoft growth story going forward?
I think it's a very small portion of that pie. I mean, frankly, they eventually will be the leaders in this. I would say gaming. Eventually, they bought a lot of studios already. They have a very massive cloud platform, which eventually will be used one day to do cloud gaming. So it's just delays it a little bit, but I don't think that it puts them at a disadvantage. Only from a timeline point of view, not from a content or a processing power point of view.
Anurag, what the world really wants to know is how much playing of Call of Duty did you have to do to kind of analyze the importance of this deal?
Actually, I be honest with you, I have my teammates play this a lot. I'm not a gamer.
Okay, that's fair. That's fair. Do you think ultimately, when all is said and done, they will get this deal done? It's just a matter of time and a bunch of court costs and legal costs?
No, I don't know. Actually, no, it's not a done deal, frankly. I mean, because if you look at the stock price of Activision, it is, building it that it's going to be very tough, if not possible, to do that. So I'm not betting on that fact that this will be done. It's a done deal. There are a lot of hurdles to go through at this point. One way or the other, I think, it puts them at a slight disadvantage if they don't get it. But if they don't get it, then they can use all that cash to, deploy it somewhere else. I don't think this is a game changer for Microsoft from my side.
What makes the CEO so confident then? Like, I know that that's kind of a thing that CEOs do. They just say they're confident about situations like this. But do you think there's any validity to his security on this?
It is very difficult because at the end of the day, it really depends on what the regulators are looking for, how they think about it. If you were to listen to our antitrust expert, Jen Rhee, on this thing, in any other environment, this wouldn't have been, a big issue. But in the current environment where the government is really hell-bent on not letting any of these large companies become any bigger, it's a very different climate than it was a few years ago.
So, Anurag, we've talked with you certainly throughout earnings season about Microsoft and others. When it comes to what really is the big engine to growth for Microsoft going forward, is it cloud? What is it that really is so important to you in terms of when you watch this as a business story and in terms of a, financially performing story?
So for Microsoft, there are three major product categories we always focus on. One being the cloud, which is the fastest growing and I would say arguably the most important one right now. And the other two are Office as well as Windows. So those are the three big legs. The other products, whether it's Surge, whether it's Xbox, whether it's Surface, they are smaller products and have less of a overall impact on the company. But, hands down, it's the cloud growth, which is the story right now. We saw really good growth in the last several years. And this year we are seeing that declining, because of economic activity and people, holding back on enterprise tech spending. But we personally think this is a, short-term blip. We think when the economic activity improves, when the Fed decides they're going to stop raising rates, we think tech spending comes back, and with that, cloud spending comes back.
I feel like that was really important. Can you extrapolate on that a little bit, the impact of the Fed pivoting, if they do, on rate hikes and what that could do to a company like Microsoft?
Yeah, so I think it's not just for Microsoft, for entire enterprise tech spending pivots on one thing, and that is basically how much corporations are willing to spend on technology at any given year. For the last 5 years, we have seen a massive boom in technology spending. The top 20 software companies have grown at an average of 20% in that framework per year, 20% per year for the last 5 years. Now this year, we're going to see a pullback because people are not sure where the economy is going to go. And when they're not sure, when business confidence is down, CIOs or CTOs don't spend as much money on technology products. And this is where we are in the cycle. But our view is, once we figure out which way the world is turning, a lot of this spending on digital, on cybersecurity, on cloud, all of that comes back, because this is not something that was a pandemic-driven spending. This is something that we need to do structurally.
So the cloud revenue slowing, which is something we talked about when they last reported, that's just kind of where we are in terms of the economy and maybe the IT spend at this point.
Yes, and there are two elements of it. Because what happens is when you move a lot of your infrastructure to the cloud, you really change your cost structure from a fixed cost structure of owning those assets to a variable cost structure, which means you don't really need to spend as much or use those products as much. And that actually helps the clients, which is enterprises, but it doesn't help the cloud providers. And to be very honest with them, it's fine for them in the near term because eventually it will force companies to move more of their portfolio to the cloud because it's such a good way for them to taper costs when they need it.
Anurag, we've talked with you about this too, and this is, of course, Microsoft's chatbot, if you will, the Bing chatbot. There's a story on the Bloomberg, it's among the most read, about JP Morgan Chase curbing its staff use of the ChatGPT chatbot, according to a person familiar with the matter. Does Microsoft have to be a little nervous about companies, places restricting the use, or is it just a case it's early on and as they work out the quirks, and when people start to feel more comfortable, it'll be okay?
I think it's second part at this point. I mean, frankly, I'm not going to use, if I was doing a research project or if I was recommending something to, one of my clients, I wouldn't want to just blindly take their word for it. I would want to make sure it's vetted and, there are credible sources behind it. I think it's going to take time, but, frankly speaking, what we have seen, what some of the work that they can do with ChatGPT and Bing inclusion in it, it is a fairly impressive product at this point as far as, I would say productivity enhancement goes.
Do the headlines about ChatGPT saying it wants to be a human and things that we think are funny, but does it have any sort of serious impact on the company and on the stock?
It's like any other bug. When you launch a brand new software product, it has to go through different iterations of it. It's just that this is a little more personal for people to understand.
Yeah.
If this was a Windows product and it had 8 bugs in it, nobody would ever know about it. It's only the developers would be giving that feedback to the company. So I think it's just the early move at this point. It's just going to take time. I have no doubt that over time, this is not just ChatGPT, but other conversational AI agents from other companies, whether it's Apple, Amazon, or Google, will actually make a huge difference to our lives going forward.
Hey, just got about a minute left here. Anurag, we've got shares of Microsoft down about 0.6%. They're up about 4 or 5% so far here in 2023. If you were sitting down with Satya Nadella, what would you ask him? What would be the one question? And got about 40 seconds.
I would really give a little more clarity on how cloud spending works. I would want to look at a lot more detail and data on that, because this is one area where people have no idea going into a quarter as to how this is going to shape up for the next, 3 months or 6 months or 9 months. I think the visibility is a little bit hazy. Would love to get more information on it.
All right. Have you played with ChatGPT?
Oh, many times. It's phenomenal. It's phenomenal, actually, in terms of what all things it can show you.
It does feel like pretty mind-blowing. Anurag, thank you. We always appreciate it. Anurag Rana joining us via Zoom in New Jersey. Of course, he's Bloomberg Intelligence Senior Software and IT Services Analyst. As I mentioned, Microsoft up about 4.7% this year, about down just about 2/3 of a percentage point. Have you played with ChatGPT?
Oh my God, of course. Can you
love
imagine
it?
me not?
Is it like-
so interested in it.
Is it like talking to Alexa or Google or?
It's way more nuanced, I feel like. It really captures all sides of an issue in a way that I feel like I haven't seen before. It's really cool.
All right, you are listening and watching Bloomberg Business Week. Carol Massar, Maddie Mills. This is Bloomberg Radio.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We check the markets all day long at Bloomberg. Red on the screen right now. It has been a choppy session. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks have faded after the 2 p.m. Fed minutes. The Dow is now down 155 points. S&P's dropped 15, and NASDAQ declines by 8. The U.S. 10-year yield of 3.92%. Gold is down 10. Oil trading in the red. And Bitcoin is down by 1.7%. Of the main 11 S&P sectors, only materials and consumer discretionary were in the green. Real estate and energy were under pressure. And leaders to the upside in the Dow, Salesforce, Travelers, and American Express, while Walmart fell 3% and led to the downside. After earnings, Palo Alto Networks is up 11%. And in other news, Third Point to launch a proxy fight at Bath & Body Works. And Intel slashed its dividend 66% to its lowest payout in 16 years. Wrapping things up, NVIDIA and eBay report after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over at your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, market and economic watchers are still scratching their heads over the most recent monthly U.S. jobs report, when employers added
but
more
you know
than...
what? 2 years,
I don't know if we have
years,
some
a
interference
while
there.
ago, 2 years seems like a long time.
1,
2
2, 3,
years
4,
is
5,
fast,
6, 7,
and
All right, there we go. Sometimes it happens. There's gremlins around on this crazy Wednesday. All right, so we were talking about the last jobs report where we had about more than 500,000 jobs in January created. I mean, it was just massive. You also had the unemployment rate unexpectedly retreating to its lowest since 1969. We know, Maddie, that the tight labor market persists for many types of workers, including blacksmiths. Enter robots.
Such a cool story we've got here. With more on this story, you can find it online at Bloomberg.com/businessweek and on the Bloomberg. But let's get to it with Ashley Vance, Bloomberg Businessweek features writer and author of Elon Musk, Tesla, SpaceX, and the quest for fantastic future. Ashley joins us via Zoom from Palo Alto, California. Ashley, great to speak with you. I think we are all incredibly jealous of you because you have the coolest job in the world. You get to try all of this cool stuff. Tell me about this latest cool technology that you tried out.
Yeah, well, a few months ago, I went to this company called Machina Labs. They're based in Southern California near Los Angeles, and they've developed these robots, but really some software and a lot of sensors to go along with it that allows them to bend sheet metal, to shape metal in ways that would have been done, well, that has been done for centuries by blacksmiths, and you know, it's just this kind of radical new form of manufacturing, automated manufacturing, that could be a huge boon to industry overall.
Is this ultimately, Ashley, something that can really scale up, ramp up at some point in the future?
Yeah, you know, right now this company Machina, they're working with NASA, the Air Force. They're building, in some cases, kind of spare parts for a fighter jet that's really hard to source, or body panels for a rocket or something like that. So not quite mass manufacturing yet. The plan, you know, is, if all things work out, is to have tons of these robots and have them going at this on a larger scale. And so it could be, but you know, in general, mass manufacturing with dies where you're stamping out parts will probably be cheaper for a long time. But this still has a big role to play.
All right. Ashley, I'm waiting for everybody on Twitter to be like, see, we were right. Robots are going to replace our jobs. I mean, but that's not kind of what this is about. This is, I mean, we don't have a lot of folks necessarily going into wanting to be blacksmiths or metalworking, right? And we have a tight labor market, but there's even a bigger thing of people not wanting to go into what many would call the trades.
Yeah, exactly. I mean, if you go talk, I spend my time talking to manufacturing companies and customers, and the biggest problem right now is we had tons, especially in the U.S., lots of kind of mom and pop shops that got kind of big, but they would do a lot of this metal work, even for companies like SpaceX. This still happens today. And in a lot of cases, the kids have not ended up wanting to go take over the company. Other younger people haven't pursued these trades. And so right now we have this huge delays in getting spare parts, in manufacturing writ large. And so it's not really replacing jobs as much as it's filling jobs that just are not kind of existing right now.
So what is the economic impact then for the consumer at the end of this whole chain? Selfishly, does this make anything cheaper for us?
It could make big things cheaper. One of the most exciting parts of what Machina is doing is that these robots can kind of do things really that humans can't. And because you don't have to, if you're a company, if you're a maker of cars, you don't have to put this huge investment in the dies that they use to stamp out body parts cost hundreds of millions of dollars when all is said and done. So if you want a customized car, you want something that's unique, these robots could do that cost effectively. And so there's this idea that we might have much more choice and variety in some of these things that we buy.
How much do these puppies cost?
Well, the starter pack for the robots is
There's a starter pack?
It's about $2.5 million. You get two of these robots. They look like the ones that people might have seen on an automaker's line, a big arm that does stuff at the end. And then there's this big contraption that holds the sheet metal. And, the real trick here is that metal behaves really strangely when you bend it and start working with it, and it does odd things. And that's why we have blacksmiths that have learned this stuff over centuries. And so these robots, with their software that comes in the package, actually know how to do these techniques, and they use AI software to get better over time. And so, but you're kind of starting at about 2.5 million.
Well, I want to pick up on what you're mentioning, that it takes like this intense mastery of the craft. How surprised were you that a robot was able to successfully do this?
I was pretty shocked. So for the story, very quickly, I had my face digitized. It was scanned by a laser and turned into this 3D image that the computer could feed into the robots. And I expected something really crude, no offense to myself, to come out on the other side. I just didn't think the robot would when you see these arms, they're huge. I didn't think it would be able to get all the contours of my face. And it did. It created this kind of 4-foot large bust of me, and it's very lifelike. It scares my children. I put it by them to keep watch on them when I'm not around.
Is it in the house somewhere?
It is. I got to keep this souvenir, and so
sheet over it. You're hiding it from the kids. No, go ahead.
And so I was kind of shocked, because I was thinking I could see like a body panel for a car, just sort of shaping metal into a curve, but this has my nose, my nostrils, my lips, everything. And so, when you see this giant robot doing this, they have the small tools at the end. It was quite remarkable.
I love this line in your story, how you say that Machina's robots are still too slow to replace the mass production portion, I guess, of manufacturing, if you will. But you say they are ideal for the earlier stages of the process, helping companies test their ideas before they commit money to final production. It allows companies, right, to kind of play around a little bit. And when we think about innovation or disruption, this is a pretty cool thing.
Yeah, because if you're a car company and you want to make a new door for a new model, you have to pay for the dies to stamp out and the molds to produce all the doors along the way till you find the one that fits just right or that's shaped just right. And so that's millions of dollars every time you're making an iteration, where this robot can actually do these one-offs, these 5-offs at the beginning of the process, and then it's only when you figure out exactly what you want that you then send it to the mass manufacturing process.
I think what's fun about this story, it takes me back to a job I had in high school and a little bit in college, and they made plastic parts like sprockets and belts. And it was all manufacturing. No, and they had molds, and like those molds were expensive. So like you think about how these things are made, and this really plays into it. Having said that, Ashley, you do have this great vantage point when it comes to what's going on in manufacturing. And even though we're such a service-led economy, a lot of stuff still gets made. What are kind of some of the big trends that you continue to see when it comes to manufacturing?
Well, we've got tools like 3D printing to go along with this. It's bringing this sort of automation and these machines and software into this puzzle. But the coolest thing I would say is that so much of this is happening in Los Angeles. There's probably 12 to 20 manufacturing startups that I could roll off, and they're all in LA. It's kind of it's a knock-on effect from the aerospace industry and the automotive industry, but to the extent that there is maybe a modernized leap forward in manufacturing, LA is probably the single point in the entire world where you see the most encouraging signs that this could happen.
Who'd have thunk?
I know, LA.
Yeah.
I would think by you more than LA.
Right, it's a little counterintuitive, but absolutely when it comes to this stuff, it's happening in Los Angeles.
All right, this was a lot of fun. Love your stories, always, always. And you just kind of open up our mind to so many different things that are out there. So, Ashley, thank you so much. Take care. Ashley Vance there, guys. He's Bloomberg Businessweek features writer and author of Elon Musk, Tesla, SpaceX, and the Quest for a Fantastic Future, joining us via Zoom from Palo Alto, California. But I do think about it like this company, and I would go on the floor and I would help take inventory. But you know, they would have molds. They were really expensive. They were very careful. You didn't want them broken, and but they make these investments and then make these products. So it's really cool to kind of see it, like the base of how much stuff, some of this basic stuff is made.
I could ask you a million follow-up questions about this job,
It's called Plastomatic.
That is
Everything
so
was made in
cool.
plastic.
That's such a cool high school job to have.
I took inventory and did some different things there.
You were an economist in the making. You were part of our supply chain, Carol Vassar.
But it was just kind of crazy stuff. I love Ashley, though, right? He really
So
just
smart.
teaches us so much stuff. All right, guys, you are listening and watching Bloomberg Business Week. Let's get another update on world and national news. Off to D.C. and Nancy Lyons. Hey, Nance.
Thanks, Carol. Former President Donald Trump is visiting Ohio today, nearly 3 weeks after the toxic freight derailment in East Palestine.
We have told you loud and clear, you are not forgotten. You are not forgotten. We stand with you, we pray for you, and we will stay with you in your fight to help answer, and the accountability that you deserve. We'll have that accountability. It'll all be out there very clearly.
Trump says he traveled to Ohio to show his love and support to those in need. The Biden administration has faced some criticism over its response to the disaster, but aides say he has been making phone calls to local officials while traveling overseas. Democrats also point out Trump rolled back rail safety and hazardous material regulations when he was in office. The National Transportation Safety Board plans to release its initial report on the derailment tomorrow. Congress is facing yet another warning to do something about the debt ceiling. We get the update from Bloomberg's Nathan Hager.
The Bipartisan Policy Center says lawmakers will need to take action by this summer or early fall to avoid a payment default. The group says there's a lot of economic uncertainty in their model, and if tax revenue comes in much lower than expected, default could kick in around June 15th. That's before the so-called X date range beginning June 21st. Last week, the nonpartisan Congressional Budget Office flagged July to September as its potential default range. Goldman Sachs economists have penciled in early to mid-August as their base case. In Washington, I'm Nathan Hager, Bloomberg Radio.
Astronomers say they've discovered what appear to be massive galaxies dating back to within 600 million years of the Big Bang. The findings suggest the early universe may have had a stellar fast track that produced these monster galaxies. While the new James Webb Space Telescope has spotted even older galaxies, it is the size and maturity of these 6 apparent megagalaxies that stunned scientists. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. I'm Charlie Pellet. We check the markets all day long at Bloomberg. We've got 20 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ 100 index, all in the red. Russell 2000 up barely, up by 0.04%, but green for the Russell 2000. So here's where we stand. Stocks are falling. Treasury yields have paired declines. The dollar rose after minutes of the Fed's latest gathering signaled that rates will be higher for longer amid ongoing inflation concerns. S&P right now down 18 points. That is the low of the session, down by about 0.5%. The Dow down 171 now. That is a drop of 0.5%, while NASDAQ is down 18, a decline there of about 0.2%. 10-year right now 3.93%, with the 2-year 4.70%. Spot gold down $10 the ounce to $18.24, a decline there of 0.6%. Crude oil lower again today, dropping 3.2%, $73.90 a barrel, extending its longest run of losses this year. The prospect of more aggressive interest rate hikes to quell inflation has kept a lid on crude prices. Amrita Sen is Director of Research at Energy Aspects Limited in London.
Crude is probably going to be at the mercy of macro headlines. And by the way, now, even good news is bad news. You would think, oh, strong labor market in the U.S. is actually really bullish for gasoline demand. But guess what? No, now the fears are that means the Fed's going to raise interest rates. What does it mean for the future of the U.S. economy? So it is very, very problematic for crude until fundamentals pick up.
And again, West Texas Intermediate crude down 3.2%. Lots of names reporting after the close of trading today. Among some of those names, NVIDIA, Etsy, eBay, Bumble, and Pioneer Natural Resources. PXD on Pioneer, that is the ticker, and that stock trading lower now, down with the price of oil dropping 1.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Bloomberg Business Week brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. It is time to take advantage of the newly extended employee retention credit. Innovation Refunds has helped small and medium-sized businesses impacted by COVID-19 claim over $3 billion in refunds, and they are standing by to help your business get back the money it may be eligible to receive. If you want to learn more, just head to getrefunds.com.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It drives me crazy.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, we've got just about 16 and a half minutes left in today's trading session, bouncing around here, but we are near our lows, as you heard from Charlie, when it comes to the equity trade, and we definitely have seen some movement in the yields off of those FOMC minutes, but we're up near just off our highs on that 2-year at 4.69. We do want to talk about the markets. We've got Bryant Van Cronkite with us. He's Senior Portfolio Manager, co-team leader for the Special Global Equity Team at Allspring Global Investments. They've got roughly $463 billion in assets under management. He is co-manager of the Allspring Special Mid-Cap Value Fund, which has returned on average about 9% annually over the past 5 years, putting it in the 87th percentile according to Bloomberg data. That fund, by the way, Maddie, it's up about 4% year to date. Bryant joining us from Menominee Falls, Wisconsin. Bryant, good to have you here on this. We're calling it a Fed Wednesday, an FOMC Wednesday, if you will. What do you think about most when you're trying to assess what's the smartest strategy in this particular financial market environment?
Hi, Carol. To be with you again.
Yeah.
I think there's two things to think about. I think we need to think about the macro, right? What's the Fed doing, and how is that going to drive demand dynamics for individual companies? So with that in mind, I'm very focused on the paradigm shift that's taking place. The idea that the Fed can hop into the market and use lower rates and quantitative easing to support the economy, I think, is the paradigm of the last 30 years, not the paradigm of the next 10 years. And the focus now is on inflation, and their resolve is being questioned, but I don't think it should be questioned. I think they're going to continue to push higher on rates and push the economy into a slowing pattern. And with that said, from a
slowing pattern, does that mean recession or just slowing pattern?
I think recession is the most likely outcome. Now, the steepness of that recession we have to debate, and that depends on the magnitude of their decisions from here. But the reality is, the symptom is inflation, the disease is employment, and the tools they have are very blunt. They don't have a lot of precision with their options here, and so we'll have to see how long they stick with the higher for longer. But my guess is it'll be longer than people are predicting today, which drives me to the idea that when picking stocks, we don't want to own companies that are reliant or dependent on a generous Federal Reserve. So identify companies that have unique secular demand drivers for their volume, have unique pricing power from a company's standpoint, and have great balance sheets. It's those balance sheets that allow companies the optionality to drive their own destiny, whether it's through acquisitions, buying back stock, organic investments. I think the combination of those three elements really can allow you to outperform both absolute and relative, independent of the Fed.
Brian, I always think about WeWork when I think about the impact of a zero interest rate environment. So I want to get your take on tech here. I know that in your note you say that you favor, quality over low quality non-earners. What does that mean for tech? Because they love to grow and not necessarily have a lot of cash.
Yeah, the biggest beneficiaries from a generous Fed, as I've been saying for the last 10 plus years, are the companies that need it the most, the ones who aren't standing on their own 2 feet yet, who are not creating their own cash flow, the ones that have the most levered balance sheets because they benefit from lower cost of capital. And some of those companies show up in the tech space. There's value in tech, though. I think some of the software names that do produce stable cash flows are potentially being undervalued today as rates have moved higher, pushing multiples down in that regard. But for us, the focus is going to be on which companies within tech are producing cash flow today that can be used to cycle through value-creating investments like acquisitions or additional organic growth.
So let's get to names. As we mentioned, your fund has beaten most of its peers over the past 5 years, annually returning about 9% according to our Bloomberg data. One of the names that you like is Jacobs Solutions. The ticker is J. I'm looking at the stock. It's just down about 0.5% so far this year. It's a $15 billion market cap company that is involved in engineering and construction. What is it that jumps out for you on this one?
What we like about Jacobs is the transformation they've gone under for the last 5 years. They used to be a business that had end market exposure to oil and gas and other cyclical end markets, and they sold those assets, which we deemed non-core, and have reinvested through a series of acquisitions in businesses that put them at the center of the consulting and advisory services that are going to solve the most complex issues that our economy faces in the future, things like climate change and demographic shifts. And as they've done that shift with their asset base, they've now stabilized their cash flow production profile going forward. It's far less cyclical, far more stable, and along the way, that increases the amount of capital they can use for productive growth in the future. So today, the company has an underlevered balance sheet, is in the crosshairs of secular demand with the problems they're solving, and has the ability to play offense if the world does play defense. If the economy slows down, look for them to acquire competitors, look for them to buy back their stock. We think that combination allows them to compound value in the face of a challenging economy in the future.
I know that you also like Vulcan, and one of the reasons is because of its pricing power. To what extent is pricing power one of the key decision factors for you when you're figuring out where to put your money?
I think pricing power is perhaps the most significant indicator of a company having a competitive advantage. Right? If you can raise your prices when you want to and when you need to, that to me shows that your asset base is unique. And in the case of Vulcan, they play in the aggregate space. There's really only a few aggregates players in the U.S., and aggregates are the components that go into cement and concrete that ultimately build the bridges, build the buildings and the roads that we all rely on every day. And because of the uniqueness of this asset base, this industry has seen pricing go up almost every year for the last 50 years, the only exception being the Great Financial Crisis, which indicates to me these are unique assets. And last year, we're seeing double-digit pricing, and again, I think we'll see that in 2023. Now, from a volume standpoint, it can be a little cyclical, right? They are exposed to commercial real estate,
right?
But they also have infrastructure spending, right? And think of all the bills we passed during the pandemic that are now just coming into funding stage. So I actually see demand more stable, pricing rising, while their cost basket's falling.
All right, got to run. Brian, good to talk names with you and get your view. Brian Van Conkrite, he is portfolio manager at Allspring Global Investments, joining us on the phone from Menominee Falls, Wisconsin. You are listening and watching Bloomberg Business Week, and this is Bloomberg Radio.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. 3:53 the time now on Wall Street. Tesla says it's going to be locating its global engineering headquarters in Palo Alto, California, a sign of cooperation between the electric vehicle maker and the state that it once called home. Tesla shares up now by 1.5%. Sources tell Bloomberg Apollo Global Management is in talks to inject $750 million to support the leveraged finance business of Credit Suisse Group's investment banking spinoff, First Boston. Apollo up by 1.3%. Intel, the biggest maker of computer processors, slashed its dividend payment to the lowest in 16 years in an effort to preserve cash and focus on a turnaround plan. In its earnings report last month, Intel forecast one of the worst quarters in its history as a slowdown in PC sales ravages the semiconductor industry. Mandeep Singh is a senior technology analyst with Bloomberg Intelligence.
Computing has moved beyond PCs. First it was smartphones. Now we are talking about cloud more and more, AI, ChatGPT. And what it entails is a different type of chip than Intel was making. And so to compound the problems, Intel really didn't keep pace with the manufacturing side of the equation. So not only did the market move away from them, from PCs, but also the manufacturing side didn't kind of keep pace.
And that's Mandeep Singh with Bloomberg Intelligence. Pentagon and the Microsoft are investigating the leak of military emails. And those are some of the company stories we're following this hour. This is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, you know Tim is on leave. Madison Mills of Bloomberg Quick Take. She's correspondent with the Bloomberg Quick Take team. She is here in our Interactive Brokers studio. We've got a few minutes left in trading. We'll head to our TV side, talk about the markets in just a moment. But can we talk about Mark Gurman's story?
He always gets the best Apple scoops. He's the Apple genius.
Yeah, so let's talk about it. It's among our most read on the Bloomberg. It is an exclusive. And Mark Gurman finding out that Apple has a moonshot-style project. It's underway. It dates back to when Steve Jobs was there still at the company, his era. Non-invasive and continuous blood glucose monitoring. It's said to be that there's still years of work ahead, but the move could upend a multi-billion-dollar industry. If you know anybody who is diabetic, who's got to monitor this constantly, it's really crucial. It's important. But you think about technology really getting into the healthcare space, this could be ultimately a big deal.
It's a huge deal, and to your point, roughly 1 in 10 Americans have diabetes, so it could be really critical. Bloomberg Opinion's Connor Sen tweeted out the headline to this story right next to a picture of Elizabeth Holmes. I think that Apple.
That's what I was thinking about.
I know, like,
because you wouldn't need to
course.
prick your finger anymore, according to this project.
Yeah, and I feel like Apple certainly has the credibility to go down a very different path with this. But I mean, it would just be absolutely huge if this did end up coming to fruition. And the company has already been testing the technology on hundreds of people over the past decade. So this is more than 12 years in the making.
It's dubbed E5. It is a secret endeavor, and it uses a chip technology known as silicon photonics and a measurement process called optical absorption spectroscopy. Let me try and get that out. Thank you, Mark Gurman. But anyway, this is an incredible story. There's lots of more details. It does use lasers to emit specific wavelengths of light into an area below the skin where there is an interstitial fluid.
It's confusing. Like, I don't know how to talk about this either because I don't understand our glucose systems. You know?
But you basically don't have to prick yourself anymore, that it can go into the layers of the skin, and using these lasers can figure it all out. It would be mind-blowing. Cool. Still more work to be done. Head to Bloomberg.com or check it out on the Bloomberg terminal because it is incredible reporting by our Mark Gurman. Again, among our most read, and it is an exclusive. So we talk about technology and healthcare, right? Like disrupting it.
Absolutely.
All right, right now, big day, FOMC minutes. We got that. We're getting ready to wrap up the trading day. Time to head over to our TV team. Beyond the Bell. It starts right now.
Thank you so much for your time, Amanda Agati, CIO of PNC Asset Management Group. Stay tuned.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day, the Wednesday trading session. Vonnie Quinn and Gina Martin-Adams counting you down to the closing bell, and here to help take us beyond the bell with a global simulcast, we're joined now by Carol Masser and Madison Mills, bringing together our Bloomberg television, radio and YouTube audiences worldwide to parse through the most crucial moments of the trading day. Carol.
Another interesting day, right? And those Fed minutes certainly kind of helping to shape to the last couple of hours of trading. What's interesting, I was looking at Fed swaps. They are upgrading that quarter-point June rate hike to near certainty. So there was some speculation or not near certainty, and now it looks like it's getting done, at least based on the Fed minutes and kind of the tone of the market right now, Maddie.
Yeah, really interesting to look through these Fed minutes. I'm searching the word recession, seeing it come up a couple of times, seeing also only one mention of pause here. So that's something that I think is pretty interesting, Gina.
Yeah, and also the equity market generally taking the Fed minutes relatively well, despite the fact that we did find out that two Fed presidents, Fed voters, even at that time, were waffling on 25 or 50 basis points, and the data that we've had since has been arguably quite a bit stronger. The equity markets generally seem to be shrugging this off. Maybe after yesterday's trade, they were just expecting much, much worse to come out today.
Yeah, exactly. And we're even seeing the VIX, pretty muted, down just a little bit. It was above 23 earlier in the session, below 23 right now. Some individual companies, though, even as we're coming to an end to earnings season, still announcing the possibility of job cuts. And we have the Washington Post saying that even for meta platforms, Carol, there will be some more job cuts coming.
Yeah, I thought that was a surprise. We'll keep an eye on that one, Bonnie.
Yes, exactly. As you can hear now, we are sounding the closing bells at the exchanges, and let's take a look at where we're wrapped right now at the close. The S&P 500 down 6 points in the session, well below 4,000 though, 39.91 there for the S&P 500, just more than 0.1%, but nevertheless, the last two sessions have both been down sessions after 3 weeks of down sessions as well, Carol.
Yeah, keeping an eye on NVIDIA here as it wraps up, a slight gain, about 0.5%. It's going to report shortly, but keep in mind, it's been on a tear since about mid-October, up about 84%, Gina, so we'll see what this one has to say.
Yeah, and really sort of wide dispersion among performers in the equity market. You can see some decent performance out of the auto and component space, materials, retailers. These are relatively risky segments of the equity market, so certainly not a risk-off trade, yet really poor performance for food and staples retail. Those are traditionally defensive stocks, along with real estate, transportation stocks, a little bit defensive down there. So no real clarity or clear signal emerging out of the equity market. Definitely one of dispersion. Maybe pick your spots carefully is the lesson of today.
All right, so that's a look at your broad industry groups. Let's get to some specific movers to the upside here in the Wednesday trade. Palo Alto Networks, this is a top gainer in the NASDAQ 100, up about 12.5%. This is after the security software company came out with second quarter results. They did beat on both the revenue and billings line. Several analysts raising their price targets on the stock, saying the company is managing macro pressures effectively and executing well on its strategy. So that was certainly an outperformer. Caesars, remember we broke the earnings after the closing bell yesterday, top of the S&P 500, a gain of about 5.5%, setting off a rally, if you will, across the gambling space. Analysts positive on the company's fourth quarter results, which included some same-store adjusted EBITDA that did beat consensus. So again, Caesars up about 5.5%. One more, housing sector, Toll Brothers, they came out reporting first quarter earnings per share and orders that did beat consensus. This stock, you can see, up about 3% in the trade. Analysts also coming out responding positively to the print, noting that the company beat to net orders and that they maintained guidance. So some upbeat news there as well, Maddie.
Yeah, and I have some decliners here as well that are a little bit less upbeat. I really want to focus on consumer discretionary, which is up today. Really interesting, given that the S&P 500 retailing index is down. But let's dig into some specific equities here. Of course, we've got Overstock.com. Overstock shares down a little over 7% Wednesday morning, now down by just over 2%. That's after the online retailer reported fourth quarter earnings, of course, and fourth quarter revenue that was weaker than expected. And then we've been talking about it all day. Got to talk about TJ Maxx. We know it. We love it. It's down near 2% after a disappointing outlook this morning. TJ reported a shrink-induced margin shortfall in its fourth quarter, and that gave first quarter and annual EPS guidance that trailed estimates as well. But the quarter they delivered was decent, so maybe that's why we're not seeing it dip as much. And then ZipRecruiter. This one is really interesting, falling a little over 22% at the end of the day. That is after the unemployment or the employment platform released full-year revenue forecast that was weaker than expected. That prompted a downgrade from Raymond James. But what's interesting is that Zip guided to softer than expected 2023 revenues because January did not see the typical seasonal improvement for job listings. So that could be one of those bad news, good news situations that could mean good news for the Fed if we are seeing less of those job listings on Zip.
Well, and Carol, you mentioned it, the market now fully pricing in that third rate increase in June, so another 25 basis points fully in after those FOMC minutes earlier. We did see a move in yields. We waited really pretty much until after the minutes before we saw most of the move, but the two-year yield at 4.6933%, and don't forget, yesterday it hit the highs since 2007. So while we're off those highs, we are very close to those highs. The inversion as well is really just not changing that much. The 2-10 spread negative by 77 basis points, Carol.
Yeah, I do feel like we continue to get kind of some fine tuning when it comes to the Treasury trade, and that's where those FOMC minutes played in. And I think something we need to think about is those minutes were before that strong jobs report, some of the other strong data points that came out. So it makes you think, my God, what would the Fed have said in those minutes if it was post those reports? And it's something to think as we count down, Maddie, to that March meeting.
Absolutely. And the Fed obviously talking about the labor market and the labor dynamics in these minutes, saying that wages subdued a little bit, but the overall job market was still a little bit too tight for the Fed's liking. And interesting on that breaking news from Meta on layoffs, Vani, that you mentioned, the Fed did talk about those tech layoffs, saying that those tech layoffs may not reveal sort of a larger impact and a widespread weakness in the demand for labor that we're seeing overall. So I thought that was pretty interesting as well, Gina.
But one thing they did notice, though, is commercial real estate, which I thought was a really interesting pivot that they made to sort of talking
Aren't you
not
waiting for
just
that
about
shoe to
inflation.
drop, it feels like almost?
Yeah.
It was really interesting, wasn't it? Because they're finally talking about maybe the consequences of tightening too far, too fast, or too far at least, and where that we might start to see the weaknesses emerge. So that's something to watch certainly going forward.
All right, right now we're watching some earnings in the after hours. eBay just crossing, and fourth quarter adjusted EPS continuing operations. That's a slight beat, $1.07, a penny better than what the street was expecting. Fourth quarter net revenue, $2.5 billion versus $2.47 billion, and then giving an update on the outlook. Right now, the stock up about 2.5% in the after hours. eBay saying it sees first quarter net revenue of $2.46 to $2.5 billion. That is above estimates, folks. $2.36 billion, and also talking about first quarter adjusted EPS from continuing operations. They are bumping this up as well, $1.05 to $1.09. The street estimate is for $1.06. And then Vani, they declared a quarterly dividend of 25 cents a share. So investors liking what they're hearing. Stock up 2.6% now.
They're absolutely loving what they're hearing out of Etsy as well. That stock up 7.5% post-market, but we had a beat on the top line. We had a miss on the bottom line for Etsy. Etsy's fourth quarter revenue coming in at $807.2 million. The estimate was for about $60 million less than that. But EPS, earnings per share, coming in at 77 cents, and that misses the estimates by 1 cent for Etsy. Nevertheless, that stock up more than 8% now post-market.
Generally, the market generally happy with these earnings announcements from both eBay and Etsy. How about that dividend increase from eBay? What a contrast from the dividend news that we heard earlier today. Also, a tech company offering a greater dividend. So let's keep that in mind and certainly keep a watch on what's going on with those capital deployment strategies. That could be a big story for 2023.
It really could be. And Gina, I'm so interested not only in your take on some of these earnings we're getting here, eBay and Etsy, of course, but also on whether you're seeing any impact from those Fed meeting minutes in the housing and real estate sector in terms of how the market is reacting following those minutes today.
Yeah, we're definitely seeing the real estate space is trading off more than any other sector aside from energy. So along with oil prices, the Fed is definitely having an impact on the market through that real estate segment, through those comments on the vulnerability of commercial real estate, and certainly through this commitment to continuing to increase interest rates. So we are seeing the Fed filter through to the equity market, just maybe not as much as many had feared coming through today.
Going back to what you said, Gina, about eBay and declaring that quarterly dividend of 25 cents a share, this comes on a day when Intel did a massive cut on its dividend. The street was expecting it. They were like saying this is very pricey. I think it was going to cost $5 to $6 billion a year to kind of service that dividend. And this is difficult as Intel does, Vani, its build out and help shift the company and go through its transformation. So it's interesting to see Intel, that massive cut, and then eBay declaring that dividend.
We have another one reporting earning today. Not just yet, but in a few minutes we are going to be hearing from NVIDIA. And, you know, it's guided lower. It's been very cautious, but it might be a difficult quarter for NVIDIA as well, Carol.
Yeah, especially with its exposure to the PC industry. The stock, little change in the after hours, but as soon as it crosses, we will all break it down. All right, that's a wrap. Our cross-platform coverage Beyond the Bell on radio, TV, on Bloomberg Originals, and of course on YouTube. Folks, we call it Beyond the Bell, but we will see you again, same time, same place tomorrow. In a little while from now. You might recall on Monday, Bloomberg reported on an episode that underscores the vulnerability of global computer networks when hackers got hold of login credentials for data centers in Asia used by some of the world's biggest businesses. The move seen as a potential bonanza for spying or sabotage, according to a cybersecurity research firm. So we thought, let's get an update, if you will, when it comes to cyber attacks.
Yeah, really important story that we definitely need to keep monitoring, and I think our next guest is going to help us be smarter on it. This is Charles Henderson, Global Managing Partner and Head of IBM's X-Force, joining us via Zoom from Austin, Texas. Charles, thank you so much for being here with us. Give us just the lowdown on IBM's State of Security report. What are your big takeaways?
So, you know, you think about every company that you just dealt with at Closing Bell, and the name of the game is efficiency and return on investment. And criminal organizations are no different. What you're seeing is organized crime step up to the plate and look at how do we gain efficiencies, how do we improve our gross profit margin, and how do we do that with automation, all the same things that you want to see companies doing. And right now, they're doing it exceedingly well.
Go ahead. No, go ahead.
No, really interesting to hear you talk about them doing well, because we don't always get good news on this topic. What are some of the other major findings when it comes to sort of where you're seeing energy attacks at X-Force specifically?
So, you know, one of the key things that the attackers are looking for, the criminals are looking for, is leverage. They are looking for real world output of their labor. So, you know, if you think about like energy or manufacturing or industry, minimal tolerance for downtime, they're a key target of attackers because those sectors tend to know what the cost of downtime is going to be down to the dollars and cents. So if you have ransomware against an energy provider and the lights go out, or a manufacturing facility and the assembly line stops working, criminals are relying on the fact that they're likely to pay a ransom or extortion because they know how much it's costing them in the real world dollars.
Hey, listen, what I'm always curious about, and I feel like at this point, Charles, we know that this is happening, right? It's happening around the world. It's kind of a part of normal operations when it comes to business. What are we learning year by year? What's different about what happened last year versus the year before? Is it just the frequency? Is it the type of cyber attacks that are happening? What is it? Or is it all kind of the same? It's just more, perhaps?
So, you know, one of the biggest things, and I already talked about efficiency, but let's put that into numbers. A ransomware activity on the part of a criminal enterprise takes 95% less time than it did 3 years ago. Wow. So 3 years ago, we'd say 2.5 months, soup to nuts, from the point at which they got in to the point at which they accomplished their goals. Now that's closer to 4 days. That is huge efficiency gains. That means that we as an industry have way less time to detect and respond to an active attack. That means we need to get better. We need to gain those efficiencies as well.
Where are we at now with those efficiencies? What like letter grade would you give us in our ability to respond to these 4-day attacks?
Not great. And I'll tell you why. We have a vulnerability debt that is going to be difficult to overcome. Most organizations cannot keep up with patching anymore. And so it's no longer a wise strategy to just try and keep everybody out and count on that as working. So what we need to do is focus on assuming that you've been breached and what can you do to detect and respond to an attacker that's moving laterally through your environment. That pivot is going to be key as we go forward. Organizations are starting to do it. You saw an executive order 2 years ago that has really changed the way a lot of organizations approach. Working from assumed breach strategy, implementing zero trust strategies, all these things come together to modernize our approach to security. But the final piece of this is giving up on the perimeter and starting to focus on the interior.
Hey, listen, one thing I was wondering, Charles, how much of an impact of a global war, the war in Ukraine, how is that impacting the frequency and severity of cyber attacks?
You know, it certainly didn't help. Any time that you have conflict, you have folks that are strained, they're under stress, and that's exactly what criminals are looking for. They're looking for either supply chain stress, real world stress that they can pile onto with cyber attacks and gain leverage. Because at the end of the day, extortion is all about leverage. It's knowing that your victim has no choice but to pay you.
And this is also getting worse because of like hacktivist groups, right? I don't necessarily have the best understanding of those groups, but I know that it's not good and that they're getting better. Are you more concerned about them or about more, I guess, institutional hackers that we've already known about for some time?
You know, look, activism is a real problem for organizations, but at the end of the day, I'm most concerned with the evolution of attacks. We've gone from the advanced technical attacker to organized crime employing business tactics that they've tested long and true in street crime and applying them to digital crime. And what that means is they're gaining efficiencies, they're working smarter, not harder, and they're using a fail-fast mentality that, quite frankly, is going to be difficult to keep up with if the defenders don't adapt as well. We're going to need to start thinking like attackers.
Hey, listen, what I wonder too, Charles, and I feel like this is just, like I said, you know, cyber attacks, unfortunately, are just a way of life for us, increasingly so. Having said that, I mean, you guys certainly play into the space and provide, you know, ways for companies to protect themselves. What's the uptick that you've seen in demand for your products?
So, you know, I would say that the biggest demand we are seeing now is for, you know, threat hunting, adversary simulation, things that help organizations think like an attacker. So they're concerned with their attack surface monitoring. They're concerned with red teaming that will help them understand where they may have gaps in detection. So it's not enough just to defend anymore. Now you need to understand, do your defenses work and how are they working? Whereas in the past, it was more of a buy a product, set it and forget it. Now it's more of an interrogation of those products.
I wonder too if you've seen any sort of interest from consumers about wanting to protect ourselves as well. And if you have any advice for the average listener out there who might be hearing this and thinking, yes, this is obviously bad for big companies and governments, but also we want to make sure we're protecting ourselves on an individual level from any cybersecurity threats.
You know, everyone needs to worry about cybersecurity now. It's no longer just big companies. And you know, you only need to look at the real world repercussions of cyber attack, whether it's Colonial Pipeline a year ago or any number of things. But consumers can do some things just to protect themselves on a personal level. Multi-factor authentication is huge. You know, that's been in the news a lot lately, but a lot of organizations, a lot of the businesses that you work with already offer multi-factor authentication, but it doesn't come enabled by default necessarily. So go into your settings, look for multi-factor authentication. They may call it two-factor authentication or other names similarly, and enable it. Also, make sure that your passwords are not easily guessed. Make sure that you're not sharing passwords between multiple platforms, because remember, if one password is compromised, you don't want it to affect you multiple times. Okay, and then finally, be aware of your surroundings in the digital realm.
Yeah.
Understand that there's scam artists out there and they're looking to take advantage of you.
All right, Charles Henderson, thank you so much. Global Managing Partner, Head of X-Force at IBM, joining us via Zoom from Austin, Texas. You are listening and watching Bloomberg Business Week right here on Bloomberg Radio. Carol Massar, along with Madison Mills, waiting. NVIDIA earnings, they should be out any moment. We'll break them down right here on Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. I'm Charlie Pellet. We check the markets all day long at Bloomberg. We are awaiting the latest numbers out of NVIDIA, but we did get earnings from eBay. It projected revenue in the current quarter that topped analyst estimates, and a sign the e-commerce company's efforts to revive sales are beginning to work. eBay shares, after an initial move higher, are now little changed. Dating app Bumble gave a first quarter sales outlook that roughly met analyst estimates as it grapples with the impact of the war in Ukraine and foreign currency fluctuations. But after hours, we have got Bumble moving higher by about 5.1%. Again, we are awaiting NVIDIA. We'll give you those headlines as they become available. Turned out to be a down day, choppy session, but a down day for the S&P 500 index, down 6, a drop there of about 0.2%. Investors got little encouragement to sustain the stock market rebound after the Fed, in its minutes, signaled that rates will continue moving higher amid ongoing inflation concerns. The Dow down 84, down 0.3. Again, the S&P down 0.2, but NASDAQ had a gain of 0.1%. 10-year yield 3.91%, with the 2-year 4.69%. Spot gold down 0.5%, 18.25 the ounce. West Texas Intermediate crude down 3.2%, 73.90 a barrel. I'm Charlie Pellet, and that was a Bloomberg Business Flash.
All right, Charlie, thank you so much. Bloomberg Business Week brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. If your business was hurt by COVID, it may qualify for a payroll tax refund. Even if you took PPP, your business may still be able to claim the employee retention credit. See if your business qualifies for ERC assistance at getrefunds.com. You are listening and watching Bloomberg Business Week on this Wednesday. Carol Masser along with Madison Mills, as we heard from Charlie. We are awaiting those earnings from NVIDIA. Right now, the stock's just up about 0.2% in the after hours. So as soon as they break, we'll bring them to you. In the meantime, we do want to bring in our guest, Dan Morgan, back with us, a friend of the show, Senior Portfolio Manager at Synovus Trust Company. They've got approximately $21.9 billion in assets under the management. Dan, back with us on the phone from Atlanta. Dan, I am glued to my Bloomberg watching for NVIDIA. But while we wait, and I may jump in if they cross, what do you make, first of all, of Intel and that dividend cut, which the street was widely predicted, but it was pretty massive?
Yeah, Intel, obviously, with the transformation that they're going through right now, Carol and Madison, in regards to trying to be a foundry, right, and competing against companies like TSM and Global Foundries and Samsung. It's obviously they just couldn't continue to pay such a lofty dividend. In the past, they were looked at as a more mature producer of PC chips and data center chips, and they could afford with their cash flow to levy a very large dividend. But now going through this transition and the downturn that we've seen in chips has really weighed on Intel. I know the report that they had a couple of weeks ago was pretty gloomy. So not surprising that they had to come in and lower that dividend down to kind of right size their company in regards to some of these changes they're going through.
What does the lower dividend tell you most, Daniel, about the industry as a whole and some of the challenges in chips?
Well, Madison, the chip sector usually has a pretty high dividend compared to other segments within technology, right? We look at software, we look at all these other groups. Traditionally, chips will pay a higher dividend. Analog devices is a name that comes to mind. Qualcomm pays a very sizable dividend. So I think it is, a little bit of what's been happening in terms of this downturn. We've been, the sector in terms of sales has been in a negative growth mode really since the third quarter of 22. The street's estimating that by the second half of 23 that we'll start to see a turnaround in the chip sector. But, obviously Intel had to make this change to kind of rewrite the ship with this new strategy move that they're making.
Hey, as we wait for NVIDIA, let's go to that name because it should come out any moment. I mean, this stock's been on a tear since mid-October, Dan, as you well know. It's up about 41% so far this year. A lot of exposure to the PC industry. How are you looking at this quarter and outlook for the company?
Well, Carol, NVIDIA is up almost over 90% since October lows. If you were smart enough to jump in there right before the holidays and buy the stock, you almost have a double, right, on NVIDIA. So, coming into this report, we've got a lot of moving parts. Obviously, we have the data center group, which is their core group. They make the chips that go into the infrastructure as a service companies like Azer and AWS and so forth. We're looking for $3.8 billion. That should increase about 18%. Advanced Micro Devices reported a couple of weeks ago that their data center group was up 42%. So hoping for pretty good numbers there. Gaming has been the disappointment, right, Carol?
Yeah.
You and I have talked about NVIDIA a million times. We always have fun with it. Year over year, we're looking for it to drop by 53% to 1.58 billion. Only 25% of their total sales on this quarter is expected to come from gaming, which is unheard of. It used to be the leader. I think you and I remember we did a show. We talked about how data center just surpassed gaming in terms of total revenues. But we are looking for somewhat of a sequential improvement in gaming quarter over quarter. So. And then you have all the buzz right now, right, guys, on this
AI.
Yeah, Chat GPT. I mean, Microsoft announcing that just put that in the forefront. But this is like really kind of old news for NVIDIA. They're 40% in terms of the chips that they produce that go into artificial intelligence. That was one of the reasons to own the stock, 3 or 4 years ago. Now all of a sudden everybody's thinking it's going to get this big boost from something they've already been involved with for a very long period of time. So those are the kind of things that are moving around the stock right now. You also saw the news that came out this morning in terms of the deal with Microsoft is going to start putting their games on GeForce Now cloud platform, which has 25 million subscribers for NVIDIA. So that's another big feather in the cap heading into this report.
That was my exact next question for you. Does that change how you rate NVIDIA's gaming prowess?
Well, yeah, I mean, so NVIDIA, remember, they're the guys that are making the chips that allow the things to run, where Microsoft is actually through the Activision deal, which we've talked about before, which is still in the process of being closed down. They're the ones that are going to have the Xbox with the hardware and the actual games. We're just going to run it off of the NVIDIA system. So it is, it's a huge plus for both NVIDIA and Microsoft. It's again a very positive news, coming into this earnings report.
It's interesting, and in our conversations with you, with Ian King, who covers the semiconductor space so brilliantly here at Bloomberg, it's a cyclical industry. But I do wonder, is NVIDIA a name that you kind of set apart from some of the other players?
It's interesting, Carol, just to tell you how boring my life is.
Don't say that.
Well, I actually went back and I did a 25-year history of the SOX, and I looked at price to book ratio, right? And I was trying to get an idea where we were in compared to, let's say, the tech bubble, where we were into, let's say, the end of 2021 when we were way up on the SOX and so forth, and we were trading like over 8 times price to book. And then I looked at periods where we had big downturns, like the financial crisis of 08 and then the 9/11 attack. And we were down like 1.5 to 2 book. Right now we're at about 4.5 book. And it's pretty much in line with where we were during the China-U.S. sanctions and right after COVID-19 hit. If you remember, the market went way down, the chips went way down that spring, then they rallied back up again. So it seems to me like we're kind of in a good territory with chips overall. And again, Carol and Madison, I would look at NVIDIA as kind of above the fray, right? They're definitely a company that's positioned so well in AI. They're positioned in data center. They've got all these other things working for them with the Omniverse and things that they're doing. They've got some new architectures they just came out with, Ada Lovelace. They also have Hopper. And so, yeah, I think they're definitely the cream of the crop. But overall, if we look at chips, I think we're kind of fairly priced based on where we are. And I don't see a catastrophic situation like we did back with the financial crisis or after the 9/11 attack, where we traded 2 times price to book on the SOX.
Can I ask a silly question, you guys? When earnings when earnings are running a little bit late like this, do we have a reason about why? Like, are they running late, or are we just overly excited about getting this data in?
Yeah, I think I don't remember NVIDIA being late. I mean, Carol and I have covered this stock for a lot of times. I look back at the shows that we've done over the years. Usually they're pretty timely. I don't know if it could be related to the Microsoft story that they want to be able to be prepared for the questions that come in afterwards. But yeah, Madison, you're correct. Usually NVIDIA is right on time.
Yeah, and I don't want to read anything into it. The stock was trading just a hair higher. It's now down about 1% here and continuing to trade lower, and some movement in the after hours. So not that that necessarily means anything, but it does. It's just kind of interesting to see that change in the trade. But of course, we'll break those numbers as soon as they are known. In terms of this quarter, though, key is outlook and whatever commentary we get. I mean, this is something I feel like, Dan, we've just really been focusing on from every company, but certainly from a player like NVIDIA.
Yeah, you know what I think? The feeling I get about this quarter, Carol and Madison, is that if they can come in line with results, right? We've talked about what the estimates are in data center, gaming, and earnings and revenues, if they can just pretty much meet those and give a good outlook going into what will be their first quarter of 24, right? They're on a different year than the calendar year, this being their fourth quarter. I think that's going to be enough to keep the enthusiasm in the stock and keep it on track, because this whole AI thing is really unfolding. We're going to probably get stories every couple of weeks coming out of some of these companies like Google, and we talk about Microsoft. There's also Apple's in that mix, and also Meta, and they're going to be coming out with their new mousetrap in terms of who's got the the best model, so to speak, in AI. And I think that's just going to add more visibility to NVIDIA, because people are going to say, well, who is the top chip maker in that space, or one of the top chip makers, and it's them. So I think that's enough to keep the stock going in regards, as long as they don't miss big on this quarter, and there's not, hopefully Madison's not onto something like they're trying to keep something away from us.
It would be a shock if it was.
All right, listen, Dan, we got to run. Love it. We didn't get earnings, but we got great analysis from Dan Morgan over at Synovus. All right, right now, let's get back to world and national news. Off to D.C. and Nancy Lyons. Hey, Nance.
Thanks, Carol. President Biden is on his way home after a whirlwind few days in Europe. He made a surprise trip to Ukraine. He also attended a meeting in Warsaw. Today, he addressed the group of European nations known as the Bucharest Nine, reiterating the need to stand with Ukraine against Russian aggression. And Bloomberg's Anne-Marie Hordern says he also told them he is committed to NATO's Article 5, which views an armed attack against one as an attack on all.
These are nations on the eastern flank of the NATO alliance. They are either former Soviet states or they are part of the dissolved Warsaw Pact. So these are countries that, following Russia's invasion of Crimea and that annexation of Crimea, this Bucharest Nine was formed. And the president's message to them was, we view Article 5 as a sacred obligation.
Bloomberg's Anne-Marie Hordern reporting from Warsaw. There is now a new warning for the aviation industry, and it's coming from Capitol Hill. Bloomberg's Amy Morris has more.
Congress is set to craft long-term bipartisan legislation to set aviation policy. Republican Congressman Garrett Graves says, quote, alarm bells should be going off across the aviation industry. Lawmakers face a September 30th deadline to pass legislation to reauthorize the Federal Aviation Administration, and trade groups are already warning them to meet that deadline and avoid an extension, which would postpone policy changes and funding certainty. In Washington, I'm Amy Morris, Bloomberg Radio.
Air travel is just one mode of transportation being impacted by a massive winter storm that's pummeling the central U.S. Storm warnings and advisories stretch all across the entire northern part of the country. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:41 on Wall Street. I'm Charlie Pellet. We check the markets all day long at Bloomberg as we await the latest numbers out of NVIDIA. We did hear from eBay. That stock initially moved higher after reporting earnings, but right now we're looking at eBay stock down by roughly 5%. eBay projected revenue in the current quarter that topped analyst estimates and a sign the e-commerce company's efforts to revive sales are beginning to work, but right now eBay is down roughly 5%. We also heard from Bumble. That is the dating app. It delivered a first quarter sales outlook that roughly met analyst estimates as it grapples with the impact of the war in Ukraine and foreign currency fluctuations. But after hours, we do have a Bumble now down by just about 1%. The stock market got little encouragement today to sustain its rebound after the Federal Reserve, in its minutes, signaled that rates will continue moving higher amid ongoing market concerns. Bryant Van Cronkite is portfolio manager at Allspring Global Investments, and he was our guest right here on Bloomberg Business Week.
I'm very focused on the paradigm shift that's taking place. The idea that the Fed can hop into the market and use lower rates and quantitative easing to support the economy, I think, is the paradigm of the last 30 years, not the paradigm of the next 10 years. And the focus now is on inflation, and their resolve is being questioned, but I don't think it should be questioned. I think they're going to continue to push higher on rates and push the economy into a slowing pattern.
And right now we've got the 10-year yielding 3.92% with the 2-year 4.69%. S&P lower by 6 today, down by about 0.2%. Dow Industrials down 84, decline there of 0.3%. Nasdaq though had an update with the Nasdaq Composite Index up by about 0.1%. Spot gold down $10 the ounce to $18.25, a drop there of 0.5%. And West Texas Intermediate crude slumped 3.3% today at 73.85 a barrel. Again, recapping stocks lower as we await NVIDIA. S&P today down 0.2%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. NVIDIA is still down about 0.3% here in the aftermarket as we await their latest earnings. All right, we're going to shift gears a little bit and actually talk about and address something that several Fed officials mentioned in the latest FOMC minutes that we got at 2 p.m. Wall Street time, so earlier today. Several Fed officials discussing risks of higher rates to commercial real estate. It's something that we've been talking about a lot at Bloomberg. We've got a great voice with a great vantage point on where investors are looking to commit money, high net worth investors, I should point out, to commit money when it comes to real estate. With us here in studio, in our Bloomberg Interactive Broker studio, Nick Parrish, Managing Director at the investment advisory firm Crescent Partners. Nick, so good to have you here with Maddie and myself. How are you, and how do you see the commercial real estate space at this point? What are you seeing?
Well, thanks for having me here.
Yeah.
Good to be here in person.
You're waiting on NVIDIA too, aren't you?
I am.
We
That's
all
right.
are. We all are.
That's right. The Fed's announcement today is news for some, but not news for many, right? It's, a basic underpinning of commercial real estate is financing. Financing is very much tied to interest rates. So this has been percolating through commercial real estate markets for the last 9 months. I think what we've seen is there's certainly an impact from it. I think there was a period of time where there was a risk-off environment related to that. Markets, lenders not really knowing how to react to what was a pretty drastic move in interest rates. I feel like lenders have now adapted to that, and so maybe some of the impact that we felt from the Fed and the increase in rates, maybe not as profound today as it was 6-9 months ago, as banks and lenders figure out how to take into account these higher and rising rates.
What about excess supply coming off of the pandemic? As we did a great Bloomberg Big Take story that talked about the $12 billion in costs to New York City as people are not coming back to work. And so they're not shopping, they're not, doing things that they normally would do in the city. So city revenues are ultimately, losing out. What are you seeing from that regards?
Yeah, I think.
Are we just waiting for the shoe to drop when all of a sudden people are going to be like, we don't need all this commercial real estate, we don't need all this office space?
I think, as with anything in real estate, it's all about local dynamics. Certain markets are behaving very different than others. Where you're seeing, look at some of the Sun Belt states. So, markets in the Southeast and Southwest where you're seeing significant population coming in. Supply-demand picture is going to be very different than, say, in New York or Chicago, where you have these well-established, well-supplied markets. And then I think within markets, there's even a different story there where, we're seeing a very significant flight to quality, where newer assets, higher quality buildings, if you're a company and you're trying to attract employees back to work, having a 1980s Class B office in a difficult part of town, that's going to have its challenges. If you've got a brand new, high quality Class A building, well located, well amenitized, those buildings are going to behave very differently. There will be demand for one and maybe not the other. So I think
even in cities that are struggling to bring workers back.
Correct. Yeah. I mean, so we're based in Chicago. Take Chicago, for example. Yeah. You can have, buildings on the river, new buildings that are 100% leased, at rent rates that are at or above where they were projected. You can go down the street into the Loop, and older Class B buildings are, 50, 60% vacant.
Yeah. Well, like Times Square, like nobody wants to go to work in Times Square anymore. Yeah. They really want to avoid it. Would it be good or bad news for you if some of those high rises in Times Square that we used to go to work in transitioned to maybe apartments?
We're not doing a lot in the conversion.
Yeah.
We tend to be focused mostly on ground up development, multifamily office and industrial. The conversion piece is hard, but it makes sense. If you're in a market that is supply constrained from a housing standpoint, that's going to make logical sense. But comparing that to just building something ground up, New York's very different. You're obviously limited amount of open land space here to do ground up development. But it's all about the math and understanding if you can make that work.
The logistics and warehouse play has been, I feel like, around for a lot of years, but it makes sense, right? We're all ordering stuff, and we're finding companies are creating more logistics centers closer to where they are delivering, maybe to save on transportation costs. What are you seeing in that space? How much demand is there? How much growth is there? How much your investor money going into the space?
Yeah. So logistics is a market we've been excited about now for a couple of years, and I think it's in part driven by what is a very seismic shift that's happened in the U.S. supply chain. You're really moving from, it was almost a post-World War II supply chain where people were shipping goods into the U.S. They were then being distributed out to distribution centers and then to a store network. That's completely changed.
Right.
You add e-commerce into that where goods have to get ultimately to the end consumer and then back a lot of the times. You add to that, reshoring, safety stock, and higher inventory levels. A big component of where we're investing is around the changing logistics and supply chain and how goods are coming into the U.S. So it used to be everything came into, Newark or Long Beach.
Yeah.
Now you look at places like Jacksonville, Savannah, Charleston, Houston. I mean, Houston's one of the closest ports now to the Panama Canal.
And that's a big factor for you?
Big. So as goods are coming into those places, you need places to put those goods. You look at a market, we're developing in Savannah, Georgia today, which is now a large deep water port. You have 0.5% vacancy rates there.
Mm-hmm.
I mean, so as fast as you can build these things, there is, user demand to take those up. And so what you're seeing in those markets, either these logistics markets or growth markets, you put in another 1 million people in Phoenix, well, that's more people ordering more stuff, and that requires space. And so there is a supply-demand imbalance that exists, and there will be an opportunity for a period of time for people who can step in and help fill that void.
Nick, what you are seeing in terms of the need, the demand to build more logistics and distribution centers right now, today, what does it tell you about the economy? Got about 40 seconds.
It's a good question. I think...
is it slowing down the development of such?
Not much.
Really?
I think, there is still a need for space. I think we were so undersupplied that, a quarterly downtick in retail sales by a small margin is really not going to change the dynamic, especially when you take into account the cost of these facilities as a percentage of the overall cost of these goods. The idea of taking out another 1 million square foot building for Walmart is not going to move the needle for them. So they would rather over-index, have the space, have the inventory, than worry about, developing that extra building.
Really cool. I love talking about this space. I love talking commercial real estate. I love talking logistics. Come back soon.
Happy to be here.
Nick Farish, Managing Director at Crescent Partners, joining us here in our Bloomberg Interactive Brokers studio. Carol Master, Madison Mills, right here on Bloomberg Business Week, still awaiting those NVIDIA earnings. Stock down about 0.75% in the aftermarket. You are listening and watching Bloomberg Radio.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are just now getting the latest numbers out of NVIDIA. It sees first quarter revenue at $6.5 billion, plus or minus 2%. Estimates were for 6.35%. Checking NVIDIA stock after hours, surging now by 7.45% on NVIDIA. The FedEx Express Master Collective Executive Council of the Airline Pilots Association has unanimously approved a resolution setting the stage for a strike authorization vote. We heard from eBay after hours. It projected revenue in the current quarter, the top analyst estimates, in a sign the e-commerce company's efforts to revive sales are beginning to work. Target is going to invest $100 million to add 6 new package sorting centers in a push to expand its next-day delivery capabilities. And with more, here's Bloomberg's Denise Pellegrini.
Charlie, there's a growing push to being able to order something and get it soon after, because Target says these new hubs will be operating by the end of 2026. It already has 9 sorting centers in Colorado, Georgia, Illinois, Minnesota, Pennsylvania, and Texas. The company's still selecting sites for the new ones. These sorting centers are designed to further Target's strategy of using stores to handle online orders as it tries to vie even more with Amazon and Walmart for sales. Now, the existing hubs, meantime, they're also increasingly in focus. They are expected to double Target's delivery volume to more than 50 million packages this year, Charlie, with a growing number of items being delivered to you and me the day after we place our order.
And that's Denise Pellegrini, and this is Bloomberg.
All right, Charlie, thank you so much. More Business Week in just a moment. Right now, let's get a check on the latest world and national news. Off to Nancy Lyons. She's in her 99.1 newsroom in the nation's capital. Hey, Nance.
Thanks, Carol. President Biden is on his way back to the U.S. after making a surprise visit to Ukraine and also meeting with allies in Warsaw. Bloomberg's Irv Chapman says his last meeting was with the Eastern European members of NATO, known as the Bucharest Nine.
The president reaffirmed the commitment to defend member nations with the most to fear from Russia.
You're the front lines of our collective defense, and you know better than anyone what's at stake in this conflict. The leaders around this table have repeatedly stepped up to reaffirm our shared commitment to all these values. And together, we'll continue our enduring support for Ukraine as they defend their freedom.
As he took a photograph with the other leaders, the president was asked about Russia suspending adherence to the last remaining nuclear arms limits. He said simply, it's a big mistake. In Washington, Irv Chapman, Bloomberg Radio.
Chinese President Xi Jinping is expected to visit Moscow for a summit with Russian President Vladimir Putin. Putin made the announcement during a meeting with China's top diplomat, saying relations between the two countries are, quote, reaching new frontiers. It's not clear at this time when that visit would take place. The U.S. has expressed concerns, though, that China is ready to provide lethal support to the Kremlin in its invasion of Ukraine. Prosecutors in Los Angeles say they've charged a man with killing a Catholic bishop in a crime that stunned the religious and immigrant communities. Los Angeles District Attorney George Gascon provided details today.
Carlos Medinas of Torrance, the husband of a woman who worked as a housekeeper for Bishop O'Connell, was charged with 1 count of murder.
Gascon says the death of Bishop David O'Connell is a loss to the community. He says they believe the suspect committed the crime because he had performed work at the home and had not been paid. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Back to you, Carolyn Madison.
All right, Nance, thank you so much. Bloomberg Business Week brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. Your small to medium-sized business could be missing out on an opportunity to claim the Employee Retention Credit. Innovation Refunds has helped thousands of small and medium-sized businesses claim over $3 billion in ERC refunds and may be able to help yours as well. Learn more at getrefunds.com. All right, Carol Massar, along with Maddie Mills here on Bloomberg Business Week. And watching shares of NVIDIA, they are, by the way, the best performer in the SOX, the Philadelphia Stock Exchange Semiconductor Index this year. They are also the world's most valuable chip maker again. And based on the latest results and outlook, they're going to easily hold that position because shares of NVIDIA, Maddie, are up about 7.5% in the aftermarket.
Yeah, revenue a little over $6 billion, $6.5 billion versus 6.2 expected. So that is obviously making people happy this afternoon.
And that's the outlook, right? The bullish outlook.
Yes, exactly. Exactly. An interesting comment from the CEO. We've been talking about AI nonstop today and always, saying that AI is at an inflection point, setting up for broad adoption, reaching into every industry.
Yeah, and this is something we talked about with Dan Morgan of Synovus. He said, listen, NVIDIA has been making money off of AI for a long time. They've been established in the player, but the more momentum certainly should be a plus for that company. You mentioned they gave a bullish revenue outlook for the current quarter and the AI impact of such. The company also, for the fourth quarter, beat on adjusted gross margin, on fourth quarter adjusted EPS, and also on fourth quarter revenue. So we're really seeing some outperformance. And again, the stock up about 7.5%. And as Dan mentioned, this stock from about mid-October of last year, it's up almost 90%. So it has seen an incredible rally, and that is expected to continue certainly into tomorrow's trade.
And really quickly, he mentioned gaming as a potential growth area